Hey traders, welcome to Charts. And well, I'm actually having some tea right now, but welcome to Charts and Coffee. Already drank my coffee, double shot of espresso. We are ready to go on this day after the FOMC. Great to see everybody. It was also great to see everyone yesterday for the Anderson Advisors webinar that I did with my dear friend, Toby Mathis of Anderson Advisors. And for those of you that have come to me with the question of, Rog, how do you structure your trading life, right? These are great problems to have. In fact, one of my favorite questions, and I do get them in the Sector Secrets Mastery, is, Rog, who handles your trading taxes? Who handles your taxes? And I always tell them it's Anderson, and they've set up my entities. I trade through an entity, and there are a lot of advantages. And I always know when someone asks me that, it's the wonderful first world problem of making money trading. So I love doing that. I love seeing my members say, hey, yeah, we need it, because that tells me something's going right. So that was a great presentation from Toby. I learned something every single time. And that kind of brings me to, when do I start thinking about Anderson? About mid-month, this month, I started thinking, wow, here we are starting 2024. I've reset every year. I got to pay myself, got to pay the government, and then I reset my account, and I look to grow it all over again. And every year, it's a little bit larger, a little bit larger, a little bit larger. Um, there'll be more in my investing portfolio. There'll be more in my day trading account. There'll be more in my swing trading account. But the thing that I love to show, and we'll be doing this because brand new year and I reset, I've got my Trades Viz, TRADESVIZ. For those of you that don't know, that's the software that I use for tracking my trades. And I don't mean a per trade thing. I mean P&L. Is my account growing or not? So I'm going to be sitting down this weekend and I'll be going through that. So anything that I alert out, if you're in the Simpler Central room, or of course my Sector Secrets Mastery, where I do everything, I'm going to show you how January went. I'm going to show you the losers. I'm going to show you the winners. I'm going to show you how much we risked per trade. I'm going to show you how much we made per trade. I'm going to show you the growth of my account. Because the only thing that counts, gang, the only thing we talk about, I don't talk about one big winning trade. Who cares? Is your account growing or not? Right? So we're going to talk about that next week. Cannot wait. And every first week of the month, I'll recap what I did the previous month and what I see and where we're heading. So super stoked about that. Now, whether you use TradesViz or not, this is not in any way a TradesViz or even an Anderson infomercial. I'm just telling you all, there are certain parts of your trading life that there are either services or software that will help you become better. And I'm just sharing with you the ones that I use. All right. So as always, gang, I'm looking forward to next week. We are going to be absolutely getting hardcore into how did you do in January. My mastery folks will tell you, I'll tell you, it was a really good month. And we're starting to see some macroeconomic clarity. I know yesterday was bonkers. I'm happy to talk about that. I'm sure it'll come up in Sector Secrets Mastery this morning and in the Simpler Central room. I'll show you where the macroeconomic chips have fallen, how we can measure it, how we can see the shift. That was frankly already in the Fed fund futures, but broadly we got confirmation of it. So we'll talk about all that. So let's start out with Christian says, now that January is behind us, can we look at February, March seasonality? Christian, thank you for the question. Seasonals do not matter because of two reasons. They really don't. Anytime we have overarching larger influences, right? Seasonals, by the way, gang, as applied to currencies, treasuries, and indices, that's actually not really a true seasonal. Think about where seasonal started. Corn, wheat, things that had to grow, things that were harvested, planted, had to be transported, have to be stored, right? There's a seasonal cycle to when you can grow wheat, right? There's a seasonal cycle to what could happen to soybeans if the weather isn't right. Yeah. There's also different implications of how much wheat is planted versus how much corn is planted, things like that. But those are true seasonals. The number one seasonal this year is going to be the dovish pivot from the Federal Reserve. The number two seasonal, and I hesitate to even bring it up because I loathe the topic, but there is an impact, is the election cycle. There is an election cycle rhythm. And that's gonna supersede any kind of sort of rhythmic seasonal that we would see year to year. So no, it's not going to influence me at all because we already know what the two big influences are. And by the way, the number one is the Federal Reserve. All right. So thank you for the question. That's a great one to kick it off with. All right. What do I think about cybersecurity stocks? I'll tell you, I really haven't put that much thought into them. There's a couple different ETFs where there tend to be, I'm trying to think. I look at sometimes CLOU because there's an overlap with, was it CIBR, the ETF? I really don't put that much emphasis on a particular sector unless it's outperforming, right? So if it's in a trend, I like it. It's just as simple as that. And if within the trend of that sector, of that niche, of that industry, the top weighted stocks are also moving with it, I'm absolutely all for it. So CIBR, CLOU, it's a tech story, right? Panther, it's a tech story. So I'm generally still bullish tech, even though this is going to be a raucous week for tech because 5 of the 7 magnificents, as they're known, are releasing earnings this week. All right. When I talk about being long a stock, what time frame is long? Dimed out. It depends on the time frame that I'm looking at. So 45 days, not usually. Where's my expiration? If I'm looking at a 1-hour swing, if I'm setting up a 1-hour swing, meaning the setup, the price action, the indicator reads are based on a 1-hour time frame. My time horizon's usually less than 5 days. It's 1 to 3 days on average, I'd say. If it's a daily time frame, my minimum is sort of in that 2 to 10 day range. It could last all the way to expiration. For me, I don't want to be usually on a daily time frame less than 21 days. All right. The title of the show is A Year Ahead. Oh, did I do that? Okay. Raghee will always trade what she sees and not what she thinks. George, you are spot on. Absolutely. Awesome. How does the SPX track or align with the ES? They're the same thing. They're the same thing, gang. They might be measured in a slightly different way. Look, SPX is nothing new. SPX has been around for a long time. It's just coming back around in popularity. If you're a really, really large account trader, SPX is great because it's just massive, right? Most traders, and I would not put myself in a massively large trading account. I don't do that, right? I like to split my money up between multiple time horizons and multiple styles. However, ES, SPX, MES, SPY, they're all really pretty much the same thing. The S&P 500, which is a high concentration weighted index of financials, tech, healthcare, right? So there's a lot of different ways. I'm sure I'm leaving some S&P type symbols out, but there's many, many ways. And there's leverage styles, right? The reason I like the ES is, look, some people might say, Rog, the SPX might be larger. It's what everyone's looking at. That might be true. And what I really need to do one day is just have, maybe on a Saturday, an SPX, S&P, how to trade it breakout session. The reason I like the ES is really simple. It trades with liquidity 23 hours a day. That means that I'm getting a nice fluidity, right? I'm getting a nice fluidity of opinion, volume, attention. And so the read using indicators, the read using price, the read using volatility and volume is just smoother. And I don't want to use the word right or wrong. It's simply more complete. I hope that makes sense. It's just more complete. Now, if I use here's the part you all want to know. If I use the ES to trigger SPX or even SPY, I'm going to get more and more accurate triggers. That's the end of the story because I'm looking at 23 hours. Everything's more fluid. Think about the fact that if your indicator has to stop calculating because the session is over, 9:30 to 4, what happens? You have a great big hole where your indicator wasn't cranking away, where your price action, volume, volatility wasn't cranking away. So what has to happen? It has to warm up. By looking at the ES, which has already been trading right now for hours and hours, I've got a running start. I don't have to wait 5, 10, 15, 20, 30, 60 minutes to get an idea of what's going on. I've got a running start. Think about the edge you have on someone who's looking at, say, SPY or SPX, waiting for a setup. We can use ES for that. So if nothing else, tell your friends, why use ES to trade SPX? 23 hours, more accurate, more often we get our triggers. All right, so that is that. And does it align? Absolutely, absolutely. All right, RD, yes, I know it's recorded. I don't know where it will. I think it's on the YouTube channel. So if you're watching on YouTube, the Simpler Trading YouTube channel, I believe it's there. I believe it's there. So you can just go, you'll see a fairly awful picture of me and a very nice picture of Toby. And just click on that and you're good to go. All right. What is the difference between the yellow and purple lines? Mike, it's really an aesthetic difference to pair them up. The two yellows belong to each other. The two purples belong to each other. It doesn't really matter the color. It's really just to pair up the two horizontal lines of the box. That's really it. Yeah. Can we look at gold on the daily swing time frame? So gold, I'm going to be a little biased here, Green Eggs. We're long gold, right? And I want to get long again. And if you want to get long in gold, we're continuing to be bulls, right? So my bias is to the long side because we just rolled out of a winning trade in that. When the price action reaches, and by the way, that ES, SPY, SPX thing is not the only place we would do that. If I'm going to trade GLD calls, which we did in the Sector Secrets Mastery, really nice trade for us, I was still looking at GC, right? I'm still looking at that more complete view of the opinion of gold. So I'm looking at GC, I'm trading GLD or even MGC, right? So when GC trades down into the daily price movement range, not necessarily GLD, I'm going to buy calls. I'm going to get long the futures contract, etc. So yeah, I want to once again wait for price to trade down into that gray area of support. You can see it on the 1 hour. You can see it on the daily. It's the same support zone. It's just overlaid both those time frames. All right. How can I join? You can check out what we're doing, Panther, over at sectorsecrets.com, or if you're at the simplertrading.com website, you can navigate to my mastery within that. But if you want a direct link to it, yeah, sectorsecrets.com. All right. Let's see what else we got here. Ooh, tea leaf. All right. Next up is for swing trades. How do you use Darvis and slow stow? Slow stochastic, which is this oscillator at the bottom of my chart, is based on using it in a choppy market. So it's not about how do I use slow stochastic for a swing. A swing is just a style of trading that is overnight. Typically, I like to take advantage of an hour or daily time frame in the daily price movement range. So that's usually what my swings are going to be. The slow stochastic factors in when I need to confirm overbought or oversold. The Darvis factors in when I need to support a resistance level. And that's it. Now, if it happens on a 1 hour, if it happens on a daily time frame, it'll be a swing trade because I'm taking it overnight. So thank you for the question. All right, Coffee Dominator. That's all of us. That's all of us. Are your targets for short-term swings mostly set on my indicators or a risk-reward ratio that you predetermined before the trade? You know, it's funny. Years ago, the Trish Boss and I did a class called Exits and Entries. Not entries and exits, exits and entries, because we have to know our risk before we enter the trade. I think a lot of times we're thinking about how do we get in, and not under what situation would I get out? Under what risk reward ratio is this trade not valid? At what price level is it no longer something I want to be in? So exits and entries. So I love your question. Do I use a risk reward ratio? I do not, because most of them are just made up. What do I mean by that? Some people say, well, I'll only trade a 1-to-3 risk to reward ratio. So they'll say I'll risk arbitrarily 20 cents and I'm going for 60. But does that actually pan out in terms of support and resistance on the chart, or even the typical volatility of that chart? So most of the time, if people are saying I've got a 1-to-3 risk reward and that's fixed, they're just superimposing that over everything. They're not respecting volume, volatility, and typical movement. That I can tell you because I've seen that forever. Right. So if we're going to just randomly pick something, why not 1 to 10? Right. Okay. So I don't like that fixed risk reward. However, because I am typically going to be risking somewhere between 15 to 25% of premium paid when I'm buying an option, I do tell my traders that one way, one optional target, because I don't like percentage based exits, right? Cutesy. We made 50% of the trade, but we bought something for 20 cents and it went to 30. It's $10, right? So I don't like that percentage stuff when it comes to using that as a reason to exit a trade. I'm looking for dollars, right? I'm looking for points. So that said, one thing I do say, if we want to keep a 1 to 1 or even a 1 to 2, right? If I'm risking 15 or 25%, if we get to 25 or 50% on our return, then I'll say, okay, there's an optional target there. Cool, right? Because then some folks like to have that risk reward ratio. I've never been a slave to it. I think a realistic risk reward is 1 to 1, maybe 1 to 1.5. I don't want to have an upside down risk reward. That's for sure. But it's never been my main determining factor as to whether I'll take a trade or not. The main determining factor is how much risk to my account, right? And that's not a risk reward conversation. And how much risk to my account is far more important. Yeah. All right. Could I review XLV? Yeah, what we see on XLV is a sector that has generally benefited greatly from sector rotation, Ren. Yes. So when we look at laggards of last year, like energy and healthcare, XLV is healthcare. We know that as we went into Q1 of 2024, we see that XLV has been moving higher. And Johnson & Johnson, Merck, Abbott, Thermo, Danaher, Lilly, these have been generally moving higher with it. XLV itself can be a little spotty on the liquidity of the options, but definitely can be an ETF you can trade if the liquidity is there. The 140 handle probably has pretty darn good liquidity. So what I'd like to see is the price action move down into that gray zone, which is the support based on historical volatility, and we'll get long in that window. All right. All right, cool. All right, next up is Pierre asks, is SMH off limits for a while because we were right after AMD? The stock, I like to wait 1 to 2 days after earnings before I want the dust to settle, right? So I'll wait 1 to 2 days for the stock. But as far as the sector, no, or other related stocks that might be affected by the knock-on effect, no, I don't mind going into those a little bit sooner as long as those individual stocks are not dealing with earnings either. But no, SMH is fine because it's a little bit more it's a little bit more diluted. That's the word I would think. It's a little bit more diluted in terms of the way in which a single stock could affect it. Now, if it's an Nvidia, right, that's pretty significant. If it's a heavily, number 1, number 2 weighted stock in the sector, then it makes sense to be a little bit more patient. But for the most part, the individual stock, it's a 1 or 2 session sort of guideline before I'll engage it. But the sector should be fine unless it's an NVIDIA type weighting, since we're talking about SMH. All right. I wish you all could see some of the comments I get. Hey, oh my gosh. I'm just looking at this one. Manuel, bye-bye, banned. Oh my gosh, that might be the most obnoxious one yet. I can't even read that one out loud. Wow. Okay. Anyways, wow. All right, guys, have a great one. Have a great one. I'll see you tomorrow. Same time, same station. Be good to each other, gang. Except for Manuel. You go walk into traffic. All right. Take care. Yeah, I'll tell you about what he said in a minute. That is not PG-13. Take care.